I think we can say like pretty definitively now that, among those two, like Arbitrum and Optimism have definitely like kind of won out, right? Like not won necessarily for the long term, but they've won at least this first stage. And I think, a big part of the reason they won is because they, like basically eliminated like all discontinuities between building on Ethereum L1 and building on their L2s, right?
Hey everyone, this episode is brought to you by Namada, the shielded asset hub rewarding you to protect the multi-chain. So not only can you protect your own data across any asset and any chain, but you also get shielding rewards for strengthening data privacy protections for everyone. So you can check them out at namada.net and follow their mainnet launch. Stick around, you're going to be hearing all about them later in the program.
All right, everyone, welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer, the views expressed by my co-host today are their personal views and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone, welcome back to another Roundup edition of Bell Curve. Today you got me and Myles. Framework guys are over in Singapore, so shout out Michael and Vance. I'm sure tearing it up. And Myles, you and I are holding down the fort here.
Once again. It's great. I kind of love conference weeks when you're not at the conference and it just gets quieter and you can do some real work. So, but it's been fun to watch from a distance. Saw some pretty crazy marketing stunts going on as one would expect.
The 20,000 condoms getting arrested going into Singapore. Is that what you?
Yeah. That one. I think I saw Drift with some exotic like Ferraris and stuff like that you could rent or something like that. I wonder
like
if
Drift type thing.
Yeah, I guess so. Yeah. I don't know. Going fast, all these different things. But good stuff.
Yeah, it seems like I've heard that Token actually just smashed it. There's a ton of people there. Very different crowd than you see actually at US conferences, which is interesting because for a long time I've been a little bit hesitant about just moving into that part of the world because if you look at even speaking lineups, it's very similar to US conferences, and it does sort of feel like the crypto industry is a bunch of just young people who kind of hop from their European circuit to the Asia circuit to the US circuit, and round we go. And how much value is there really? But I think it's a pretty different crowd. And the thing that I have a little bit of FOMO for at the current moment is just Breakpoint. I saw that the manlets sold out. They got 5,000 people there. There's a great DeFi day organized ahead of time by Ellipsis and Jito. And shoot, there's one more that I'm missing there. I'll look it up in the show notes and give you credit. But yeah, I would be interested to see what the folks at Solana are talking about at the current moment because it's kind of been a good year for that whole protocol.
Yeah, totally. I feel like it's just Solana like circles are just either like super deep in the engineering side or super interested in the basically consumer application side. Less of like the infra semantics debates, more just about how do we make this thing work, how do we make it go as fast as possible, and how do we what app should we build that are going to be great the users want to use. So I've always respected that spirit about them. It's not going to have issuance curve debates and things like that. I do think in general the ecosystem is focused on the right things, especially at their stage.
So the one big question mark that I have that I'm just very curious because it seems like they're doubling down on this is their phone. So it's now there's a successor to Solana Saga, which is Seeker. They exceeded 140,000 pre-sales, which is pretty impressive. Now, if you remember back, the meta around Saga was people were buying these because the bonk airdrop, more than paid for itself. So they're literally airdrop farming the phone, which is kind of funny. But I mean, still 140,000 pre-sales. And it is, it's for a very long time, the design philosophy in crypto has been vertical integration is almost a bad word, right? This more traditional lens of, creating an ecosystem, which again, the negative way of framing that would be a walled garden with vertically integrated. It's kind of like the Apple playbook is very the antithesis of crypto, but I'd like to see people experimenting on the hardware side. And yeah, I mean, why not? I'm rooting for him. I hope it works. I think it
Me
would be really
too.
cool.
I guess I have two reactions. I guess first is like this is the one of the best examples, and maybe overly ambitious, but a great example of basically what like a labs development company could do, right? For both like sure monetization purposes, but also as a way to like facilitate greater usage of the apps in their ecosystem, right?
Yeah.
It's saying like we think crypto apps are going to be mobile first. We know that there's a lot of friction right now because hardware developers are not like mobile hardware developers have no awareness of crypto. It's like not on their radar, right? Let's put this out and let's get people having like seeing what like first class, right, like mobile crypto experiences look like. And then the second reaction is I do wonder what the end goal is here. Like I could see a world where the end goal is not for the Solana phone to be one of the most like widely held like devices in the world. It may be like success for this might just be getting enough traction uh, to get the attention of the Apples and the like other hardware developers of the world to say like, hey, what are they doing on this phone that's making these crypto applications really much better, right? And if they are able to basically like get enough attention to get some of the features that make the mobile experience great on the Solana phone into the phones that we actually use, that would be a huge win, right? It doesn't, and they could just like shut down shop of the hardware like after that if Apple like brings in a lot of these features, right, that are also like probably going to be Solana centric just because Solana has kind of like led the charge on this. That's a huge win. Even if the phone ends up being kind of like a relic that we look back on, fondly, right, at some
Yeah.
point. So I guess I'm saying it's like there are other big commercials, like big indirect commercial successes that could happen, even if the commercial success of the phone is not like, actually pans out longer term.
Here could be I'm just reacting to what you said because I agree. I think that would be like a win for the industry and likely for Solana. I've listened to a couple Mark Zuckerberg podcasts recently where he's talking about their AI strategy and why they open source versus the the closed source model. And Facebook is big enough that they have this entire ecosystem of vendors that build to their specs. And so by open sourcing, they actually get a bunch of people within their ecosystem to start building to the specs that they get to choose. And I wonder if there's maybe a lesson that could be gleaned there from the Solana side of things, where if they launch and they're the first ones that get, the broader array of cell phone manufacturers to start looking at crypto, it kind of makes sense to start looking at Solana as a spec as opposed to other chains. And maybe that's a little bit of a Trojan horse in. So kind of rhymes with the business strategy that you see for open source software, even this playing out with AI at the current moment, which would be super
Right,
interesting.
right. And like to the first point, like I wouldn't, if I'm Solana Labs, like I wouldn't want, I guess, the secret sauce like that makes the mobile experience great on the Solana phone to like be a secret, right? Like I'd be like, here's how you facilitate this from a hardware standpoint, and this works great for the Solana spec. So maybe if you're just grabbing that off the shelf from like what we did and putting it into your own devices, maybe you also end up kind of catering better to Solana apps in the first place, or at least as a start. So yeah, it's just super interesting. I think there's like a lot of good that can come out of it. Also, just a lot of learnings. Like I think we'll
Yeah.
learn a lot about how to basically build these best in class like mobile crypto app experiences.
I'm also just in favor of from a purely philosophical standpoint, I love seeing people take big swings. So I will never poo-poo someone taking a big swing like this. The other thing, though, that I think will be interesting, I agree with you that there are going to be a lot of learnings. And, this kind of recurring theme. I was reading something the other day which referenced it was kind of the birth of the cloud industry, actually. And, there were all these big generalized computing companies that were vying for. They kind of had their arms around something that was going to be cloud. I know Mark Benioff gets credited with this, but Sun Microsystems was actually kind of
Yeah,
playing around with this. But who ended up winning? Right? It ended up being like Amazon ended up being a huge player. And who would have thought that this like retail bookseller, right? This like weird niche app ended up winning. But the reason is because they started from the app designer perspective and then they built the infrastructure around it. And maybe there'll be some really valuable lessons from the consumer side for Solana here,
totally,
and the
totally.
whole industry. Hey everyone, this episode is brought to you by Namada, the shielded asset hub protecting the future of the multi-chain. Namada is a chain that's near and dear to my heart because in previous seasons of Bell Curve, we've talked about how the cardinal original sin of most blockchains is not thinking about privacy from the beginning, but also because if we want to onboard a whole bunch of applications, it doesn't work in a default transparency setting. So Namada not only brings about a better future that we all want, but it's going to help onboard a ton of new applications. So Namada introduces a novel shielding reward system. The way that it works is if you hold your assets in the shielded set, you help strengthen Namada's data protection guarantees and collect non-rewards in return. Namada will initially support IBC and Ethereum-based assets, but eventually the idea is for this to expand into a comprehensive hub for all assets. Really, really excited about what the folks over at Namada are doing. I highly recommend that you go and check them out at namada.net. You can follow their mainnet launch, which is soon TM. Very exciting. Tell them that I sent you. Click the link, bottom of the show notes. All right, so Myles, maybe with that as a jumping off point, what we wanted to talk today is about L2s, actually. So it's come up in a bunch of conversations, usually around the L1 value accrual and L2 being parasite, is it parasitic or whatever? And, we've talked about that enough, I think, and actually just wanted to zero in on the L2 landscape today because I think it's more interesting than it's been in some time. And, you've kind of got these different buckets of L2s. So you have the incumbents, which is, the optimisms and the arbitrums of the world. And they're starting to look pretty different today than some next gen or new L2s, right? So you've got Mega ETH, where there's a lot of hype around. We had Eugene on this podcast a couple weeks ago talking about Atlas, which is a very unique design, and then you've got some other winners like the bases of the world, right? So wanted to try to get a sense of maybe just have a fun conversation about some of the different business models that are getting tried in this space, and how you think ultimately these different buckets of L2s are going to compete against one another. So, I mean, maybe it just start off from like a high level there. Like, how are you kind of just looking at this space, and maybe what was some of the original wins that allowed Arbitrum and Optimism to be super successful? And then we can talk about some of the different axes that this next gen is focused in competing on.
Yep, I think it makes sense. So like maybe going back in time a little bit to when it was like kind of the big four, right? It was like Arbitrum, Optimism, Starknet, ZK Sync. And they were all launching around the same time. I think obviously it ended up taking a lot longer for the ZK rollups to launch. But I think we can say like pretty definitively now that, among those two, like Arbitrum and Optimism have definitely like kind of won out, right? Like not won necessarily for the long term, but they've won at least this first stage. And I think, a big part of the reason they won is because they, like basically eliminated like all discontinuities between building on Ethereum L1 and building on their L2s, right? They had like EVM equivalents, which meant that you could copy and paste existing apps, move them up right to L2 with ease. You could, if you are a Solidity developer and you wanted to build a new app on, one of these L2s, there was nothing else you had to learn, right? There were no like sort of real pain points and friction about it. All the critical infra providers, whether it's data providers, RPCs, indexers, right? Again, they can just kind of copy and paste all their existing setups, and all of a sudden, they're on L2, right? And so I think that was kind of like the competitive differentiator that won out. in this, first stage of rollups. But I think, we're starting to see like the trade-off that comes with. And I would say the trade-off is really around, the single threaded EVM is, leaves a lot to be desired in terms of scalability, performance, and then, customization, right? Which some apps might want, or want higher levels of control, right? You're kind of like just building within the constraints of the EVM. And so I think, now we have competitors that, like Mega ETH, that have, kind of done a lot of work to the EVM. You have, so basically making it ultra performant, but still allowing all of those infra providers and existing apps basically just copy and paste their existing EVM apps. It's just going to work a lot better, right? Over the same period, like, I guess the ecosystem of builders and infra providers around the SVM has increased a lot, right? So the SVM is now somewhat getting, I guess, closing the gap to the EVM, in terms of like the developer base that can touch it. And the SVM obviously has a ton of advantages, like we've seen around parallelization, even maybe like local fee markets, right? And so I think the first generation of like EVM equivalent rollups, kind of vanilla EVM rollups, are now thinking about, okay, how do we reach sort of like, or how do we improve like the performance of the stack, right? Like we have the distribution, but we know these guys are coming, and how do we reach parity, on a feature level before these guys can reach us in terms of like distribution reach?
I completely agree with that. I think even rewinding back in time to the choice that Arbitrum made there, I think it was absolutely the right one. The challenge is that, when you zoom out, it's the whole point of rollups actually, and I really do agree with this part of Mega ETH's philosophy, is that, Ethereum has optimized for this very specific set of properties: censorship resistance, decentralization, etc. And so the whole point of the rollup is that, you don't have to, where you're willing to make, the rollups are willing to make trade-offs that Ethereum is not otherwise able to make or willing to compromise on. And so now that's the sort of position that like the Mega ETHs and Atlases, etc. of the world are in. So here are the different ways that I see these different rollups trying to compete. One is on performance, right? And that could be, there's kind of like the SVM flavor of rollup, so that's Atlas and Eclipse, or it could be Mega ETH, which is, technical term, just cranking that shit up to 11 and putting everything in RAM and letting it spin. And then there's also a distribution, as a differentiator. So that's the base sort of model here. And then I know you rejected this one, but maybe it's a lesser one, but UX in general. And I think that there are some rollups out there that, like Blast is kind of trying to do this. They're trying to just do, they're calling themselves like the full stack rollup, or Zora is another good example of this, where they just have a really nice, easy user onboarding flow, wallet, application. It's all very easy and feels like Web 2.
Yeah. Yeah.
And then I guess
Yeah.
obviously performance is one of the axes. So I guess, and then I agree with the way that you frame that. They're competing against the incumbents, basically, liquidity, network effects, Lindy, whatever they have in terms of first mover advantage. So
And I would add two other differentiators that we haven't really seen yet, but I think are coming. One is privacy, right? So we have like, eventually we're going to get these privacy centric rollups. It will be very interesting to see like just, how many developers like actually care about privacy, and how it can be used really to create like really differentiated apps that can only happen on privacy centric chains. So, Aztec kind of leading the charge there. Then the other one, which is a bit wishy-washy, but I would say like security is and trustlessness, right, is another axis of competition. We saw like Vitalik talk about, he's not going to mention any rollups that aren't whatever it is, like stage 1 or stage two,
or maybe
2,
he's
right?
Stage 1 or stage 2,
right. So there's this kind of like new value prop, right, that you can compete on, which is to say, hey, we're like the way that rollups were like meant to be, right? As a like in accordance to the roadmap, and we are like you're inheriting even more of like the security of Ethereum, et cetera, with our model of, let's say, like combination of working like proof system with decentralized like sequencers. Um, and I think, just quickly on that piece, like I think it's good that there's a spectrum of like trust, basically, that rollups kind of like enable, right? And you should compete on that like spectrum of trust. You'll probably have to pay more, right, to use a rollup that has like a large decentralized sequencer set, and other sort of like higher security prop, or even like a based rollup, right? And that maybe customers are willing to do that, right? Especially like when we get into more high stakes, high value sort of like activity happening on L2s. Or maybe customers are, the market will say like, hey, most of us are totally fine with a centralized sequencer that we know like there's upgrade keys, et cetera, right? So I just wanted to point that out as like something that, as these rollups are like evolving past, the getting the training wheels off, like maybe some of them keep them on, maybe some of them take them off. It will be interesting. And I think that, we shouldn't be like too prescriptive about what's right. This is like super subjective.
Right. I will say though, on the sequencer point, stage 1, stage 2 is non-prescriptive about how many sequencers there are. It's purely to do with the fraud proof system or validity proofs, and with who can update the bridge contract, right? Like
Yeah,
there's that.
sure. So maybe that doesn't apply like the phase 1, phase 2, but it does apply to things like liveness that like people do
Totally.
care about, right?
Yeah.
And have like some projects out there calling themselves a roll up, and other people are like, are you guys a roll up though? Like, it doesn't seem like you are. So that's one. I totally agree with verticalization. And I think verticalization and UX/DevX like play hand in hand, right? Because you can, if you're like Atlas and you want to be opinionated, about enshrining certain things in the protocol that are, specifically helpful to like a DeFi sector, like, yeah, that is good. It's like amazing for developers that they don't have to worry about, Oracle updates or like, stale Oracle updates. And it's great for developers that they can just plug into, let's say, like an order book that kind of like lives underneath all the rest of this composable ecosystem. That's going to matter more and more, because I do think that, we're kind of at a stage where the come one, come all, build anything on top of this. We're trying to, as general purpose as possible is, it's a challenging playbook. Like there's just
Yeah.
so many of those options that are more battle tested and have more existing users and liquidity than you do. So if you're coming to market with that sort of like really unopinionated approach, you know, it is, I see it as a risk these days. You want to be able to say like, we're the best place for this, right? Because of XYZ. Unless you're base, and then you can be like, well, we have millions of users on our like centralized exchange, and by the way, we're letting them like perform actions like with their balances on Coinbase, right? Like that's a form of verticalization as well that I think is, not specific to any like sector necessarily, but just a huge draw for like a developer.
Yeah, of all of the, I mean, this is like the least hot take ever, but base has got to be kind of the big winner, right? Over the last 12 months, if you look at what they've been able to do just in terms of flows, I think a really useful metric to look at in terms of, because I think that the moat for these incumbents, like the optimisms and arbitrums of the world, is going to be the amount of ETH basically that they have. Just liquidity, I think, is going to be a massive moat for these kind of first movers, because it takes a long time to bootstrap that, even if you do have wicked performance, and you said this
Yeah.
is the home of DeFi, like you still got, there's that cold start problem that I think these L2s are going to have in the beginning. And some of it you can solve
Sure.
with a token and incentive programs and whatever, but it's going to be challenging, right? But Base has been extremely successful in attracting a whole bunch of capital to their platform in a relatively short period of time. The other thing that they can do, and this isn't as sexy, but they've got this really neat onboarding funnel, with their smart wallet as well.
Yep.
And the UX
Yep.
is actually a huge differentiator for them as well. So, I mean, Base is definitely a super interesting rollup to look at. Here, I've got a question for you. Because there are now lots of very fast, very cheap rollups, or there will be very soon. How much of a differentiator do you get the sense of like 0.01 cent per transaction versus 1 cent per transaction? We a couple of years ago, it was really easy to look at Ethereum, which was the smart contract platform where you wanted to launch, and say, hey, there are a bunch of apps which don't make sense today, right? You can't even do a central limit order book because market makers need to be able to place bids and cancel them very quickly. And that doesn't make sense if each bid is like $30 or whatever gas was. But now, we've drastically lowered that. And it's a little unclear to me, even if are we already below the threshold, where bunch of apps make sense, or if we were to go from a penny to a fraction of a penny, suddenly there's way more opportunity there. I don't
Yeah.
really have a good sense of that,
I think
actually.
the reality is it's or at least my take is that it matters only in specific contexts for specific actors. You and me, like buying, an NFT or doing something on like Blackbird, like we don't give a shit if it's a cent, maybe like 2 cents, or like a fraction of a penny, right?
Right.
Um, I think Eugene mentioned this in that podcast that you guys did, but there, in a perfect world, you could say, okay, normal user, normal trade action on Atlas gets normal pricing, right? Uh, Market makers doing tons of volume and placing thousands and thousands of orders, right, should have a different sort of fee structure, both at like the exchange level, but also like the chain level, right? Than normal users, because they actually are more sensitive, because they are generating like orders and orders of magnitude more transactions than a normal user, and they're critical for like supporting the keeping the entire like liquidity ecosystem healthy, right? And so it will be interesting. Like, this is another form of like verticalization where you could basically grant sort of different pricing structures to different actors, based off of like specific actions, right? So that would be like some way where, in the same way that you have, let's say, like the enshrined oracle, right? Those are like prioritized and free transactions, regardless of like the priority, fees on the chain.
I saw Henry De Valence of Penumbra tweet this out this week. Protocol designers should figure out ways to enable gasless transactions. Note, a gasless transaction is crucially distinct from a transaction for which someone else pays gas on its behalf. So that would be like the account abstraction, allows apps to pay gas on behalf of their users. Whereas this would actually be making like a kind of a tiered list of accounts, and a certain type of actor doesn't need to pay gas. Who actually and I think this ended up getting surfaced in the thread underneath his post, but Dave Oha of Osmosis, and shoot, I'm gonna blank on the other guy's name. I will link this to the show notes. Sorry, I'm not giving anyone the proper credit today, but they came out with a really interesting paper about a year ago on gasless transactions. And they theorized that you could do other actions, right? Which is like staking a certain percent. Like if you have a certain percentage staked to the network, right? Then in theory, that's a form of Sybil, like gas exists for Sybil resistance reasons, right? So, you're proving to the network that you're a good actor because you have X percentage stakes, so you shouldn't have to pay gas. That type of thing, I think, will be super interesting if people, want to experiment on.
Yeah. I think that was Sam Hart who
Hmm.
chimed in, just to give him.
It's
give him
always
credit.
Sam. Every good idea, yeah, you can look not too far away, and Sam Hart will be
Well,
right
yeah,
there.
I'd say like folks in this conversation are pretty high up on that list. So yeah, that's I think this theme of like, again, going all the way down to the protocol design like level, right, to enable these UX experiences, which is something very near and dear to like Cosmos's heart, right? Like that's why they, have app chains in the first place. And I think you could do it with something like they described, which I think makes a lot of sense for like a Cosmos chain. I think for, a Rollup where there might not necessarily be staking or something like that, maybe it's special transaction types, right? You have multiple different transaction types. They have different, they're handled in different ways. They are, maybe certain transaction types are permissioned to certain addresses. So yeah, there's a lot that can be done here at the protocol level that is, I guess we've seen a little bit of it in Cosmos, but I think like a lot of underexplored design space in with rollups.
So zooming back in on like if you had to sort of stack rank here, what you think the different axes that we've laid out here so far. There's distribution, UX. We can maybe lump this all into like performance. Performance as a category,
Yeah.
and then security and decentralization. What do you think are going to be the most important axes for some of these new rollups? Like, what would you be zeroing in on and trying to focus on? And then, how do you think that these new protocols are going to be able to compete with, the optimisms and arbitrums of the world?
Yeah. So I don't think there's any one correct ordering of those sort of features. It again is context specific on what you're trying to be.
Yeah.
If you are an app developer that wants to build your own rollup, then you're going to put a lot of focus on verticalization, right? And creating like an app, the perfect place to build XYZ sort of complementary apps. Or maybe even you just verticalize everything into your own app and you just, that is what creates the best version of your app. So you're going to go for it and swing for the fences, right? If you're trying to be like a general purpose sort of roll up, maybe you care about, performance and liveness, right? For every like, roll up, every single team, right? So they can depend on you longer term and, have great user experience. And then I think there's another angle like where you want to you instead of starting off with your own like first party roll up and then pivoting or like updating the roadmap to being like an ecosystem of rollups. That's kind of like what we see with Optimism, Polygon, ZK Sync, Starknet. They're all kind of like going after that sort of roadmap. There's another class of like a rollup framework that is basically trying to do that sort of like ecosystem play from the start, right? So like Anisha is a really good example of this. Anisha is a Cosmos chain that is purpose built to support rollups. These rollups all are Celestia rollups. You could argue, like in some sense, like they settled to Anisha, but they post data to Celestia. And Cosmos and IBC is right now like probably the most well functioning form of like of a cross chain interop standard. And so because they're building as a Cosmos chain, these the settlement chain serves as like an IBC routing hub for all of the rollups. It's kind of like the original vision for the Cosmos hub, but instead of all these being app chains, it's all rollups that settle to Anisha. So like they will have probably the best cross chain interop of any rollup ecosystem from when they launch. This is something that like Optimism and the super chain have talked about wanting to do. Like right now it's pretty like limited what they offer in the super chain because they don't have these like kind of like the interop features, the first class interop features that they want to develop over time. So I think that's where we'll see more specialization, and either specializing for like a cert for your own app, a specific sort of like theme, or specializing in the sense of like, hey, we're never gonna like try to host activity directly. We're gonna like purpose built this framework and a bunch of like value added services that make this the best place to go, launch your rollup. But we're not going to like have a main chain, right? So yeah, I think there's a lot coming. But
So I have a lot of thoughts on what you just said, but just to go into in terms of stack ranking, for me, I think the thing is going to be distribution. I would be, just to put some sort of prediction here on paper instead of being very high level. Like, I just think that distribution is much more important by like an order of magnitude than everything else on that scale. And I think in particular, people really tend to focus in on performance and like speed and cost and transactions. And I think you need that, but it's not enough. And this isn't meant by the way, as a dig at Mega ETH at all. Like, I actually think they're doing really well on the BD front. They've built a great brand, but I think they would probably say this as well, that it's not enough to just have super cheap, super fast transactions. At this point in the game, with the lead that other frameworks have, you have to do some of the other stuff as well.
yeah.
So I think that's just really important. Sorry.
No, go for it.
And the thing that I think is going to be really interesting to see is what two assumptions that is like the decentralized sequencer rollup as a service type part of this equation. Like, it was interesting to talk to Eugene. By the way, I should say I'm a investor in Atlas. Should have disclosed that. I'll disclose that up at the beginning of the episode. But yeah, it was interesting to hear him say that I'm actually not going to build a stack model. And I think, when everyone got very excited about this like app chain thesis and roll-up centric roadmap, and it was like everyone's going to have their own chain. And I think rightly so. I tend to push a little bit more on the value accrual and like, does this make sense from a business standpoint? And I do think one thing I've noticed with some of the roll-up frameworks recently, and even other L1s which enable this, is like, hey, is it like really beneficial to us to allow you to just spin up your own chain here? Like, it's like unclear. And if you look at a lot of these roll-up frameworks, a lot of the activity has moved off of their mainnet into all of these different chains. And it's not really clear that it makes sense for them to interop, or that they're willing to pay to interop. And so then you're kind of getting this like almost like recurring but pretty low SaaS type fee. And I think the rubber is starting to hit the road in terms of whether or not that really makes business sense from the framework standpoint. And then I also think that one of the big unanswered questions is going to be, is there one sequencer or multiple sequencers? And just my opinion on this is that I think it's very hard to justify from a pure business standpoint, but I do think that eventually regulation is going to become a bigger and bigger thing here. And I do think that's probably the catalyst, which gets everyone to adopt multiple sequencers, would be my bet here.
Yep, I agree with that. So maybe it does touch on like the business model thing, and then we talk about distribution. Yeah, I think it's pretty clear that like the largest revenue generators, the revenue winners, will it will come from sequencer revenue from very valuable block space, right? It's like, if you have like going like a DeFi chain, right, and you have lots of people willing to pay high priority fees, even on base right now, right? I feel like there are people paying priority fees, right, for MEV opportunities.
Right.
They pay a teeny tiny fraction of the total sequencer fees down to Ethereum, right? It's pretty clear like the biggest revenue generating like opportunities and creating valuable like shared
State.
blocks, shared state, and owning the sequencer associated with that. Now, if you like maybe outsource the sequencer to some third parties, I would do so in a way where like you are still retaining the majority of that revenue. It's getting sent to a treasury or something like that, and you're paying like a commission fee to those actors, rather than just basically kind of opening this up to have all the fees go to these like operators and stakers. Maybe that's how it ends up working out. I don't really know. I guess that to me is, in the at least near medium term, going to generate much more revenue than saying we will take, I guess the other way to try to do this is to try to create an ecosystem where there's tons and tons of valuable block space, and you provide enough value to those rollups on top of you that you can, justifiably take a rake, right? That I think, longer term could end up being even bigger than any individual like one chain's, revenue opportunity.
Yeah.
But if I were building like a roll up, within the next like 2-3 years, like I would probably rather, it's a lot easier to like build a chain and get apps come directly to you, have valuable block space, or build a great app that creates valuable block space and take the sequencer fees than it is to say like, we need 50 different rollups. They all need
Yeah.
to be generating this much revenue. If we're taking 10% of that, then maybe we get close to the amount that like, one super successful, like, shared state sequencer fee revenue, outcome would get you.
Here's a black swan type, or here is an embedded assumption that I see in a bunch of different frameworks and even like L1s in crypto, is that you'll be able to charge for interop. Interop is the killer feature, and you'll be able to charge for it. And that, I think, was a nested assumption in this like stack model, where you're going to have a bunch of different chains and they're going to want to interoperate with each other. So you enable that interop and you can charge for it, as opposed to like, here's another way that you could have gone about this, monetizing the different apps and chains that you want to build, is something that you brought to my attention, which is like first party hosted services, which is like, instead of Conduit running your rollup as a service, like that could just be something that's vertically integrated within the you know that the framework itself has. And so you could imagine different tiers of being a chain, which is one, the you get like a basic sort of tier, which is just, you get to spin something up. But then also, if you want services and to make it really easy and, manage all the endpoints and all that thing, then it's like a tiered kind of service offering there. I don't know, like that's another route that you could have gone down. But the challenge that I see with asking people to pay for interop is it's going to be a power law. Like, of all of the different OP stack chains, one of them is going to take off. And everyone's going to want to pay to interop with that one chain, but that one chain doesn't want to. What's the incentive for them?
I think I don't know if paying for interop is like the best way to frame it. What I'd say is like, there's a lot of benefits as a developer. There are a lot of benefits to owning your own block space, right? The control that you get from owning your own block space, the value capture opportunities, the UX, the verticalization of everything, right? There's a lot of trade-offs that come with owning your own block space. It's,
Right.
Now it's a distribution problem. It's an onboarding problem. It's like just an overhead like problem. You have all these things to think about around like, different bridges to use, getting USDC and Tether to issue natively on your chain, right? You have a bunch of, DevOps people you need to hire now to like run the chain. And so I think the common thread, I guess, that I would say like these, either it's an L1 or an L2 with an ecosystem on top, like should be doing, is breaking those trade-offs, right? And so if you are saying, hey, you can have your cake and eat it too, you can have your dedicated block space, and we have this system that makes it so much less painful, right? Because you're not out on an island anymore. Like, we have this way of basically getting you the equivalent of shared state while having the control of your own block space or sequencing, right? Now that starts to become like something that's interesting to pay for. And if you add the option as well to like say, oh, and we'll like host and run this like, hardware for you, because that's non-core to your like application. Like you're not like an infra company or an app company that wants its own chain, right? So if you want to, like, we'll take that off your plate too. That's more of like an off-chain sort of, I would say like could go to like the development company, versus I think more at the protocol level, right? Which is something that would, be more tied to like the DAO of Flare and like the framework more directly, right? Are those value added services. So I don't think it's like paying for interop. I think it's more like this combination of, services that definitely includes interop. Maybe it includes like some other first party things like, you have this like solver network that's first party to your like ecosystem, right? Could be, I think like the smart wallet thing is an interesting example too. Like maybe you try to like differentiate on the wallet side for UX.
Mm,
Point being is like it's interop is just one subcomponent of like if you're taking the approach of not trying to get people to build directly on your chain, you're trying to support this like ecosystem, right?
yeah.
You just want to give developers like the ability to get the benefits of both worlds, the
Yeah.
benefits of like their own chain and the benefits of shared state or like what they're leaving behind, kind of, right? And that to me is a much more compelling like sort of value prop, and has a higher chance, I think, of getting willingness to pay and like creating sticky features with like where like the benefits of staying and paying a little bit are greater than what you would get if you were to like go off on your own, even if you're really successful.
Yeah. All right. I think that's a good way of framing it. I agree.
Yeah.
Um,
So there was one other thing you mentioned earlier. Like I agree with you, distribution. I think it's all like that is definitely
yeah.
like the winning axis, but like I think it's not super obvious how you differentiate on distribution outside of, hey, I'm Coinbase, I have a company I built with a massive user base, like I'm launching a chain, we'll have a distribution advantage. Like of course you do, but like if you're a new project, right, it's much more limited on how you like or fuzzy on how you differentiate on distribution, and like if you're mega ETH, then you're saying like, well, yeah, we're trying to like, we're laser focused on distribution, but we're doing it with like a brand and a community first, like bottoms up approach, right? Kind of like a grassroots, like having hackathons, getting like, we're a new project, we'll attract other new projects, come on in. And then you could, something extreme is like going back to the Solana phone example, like
Yeah.
no roll up will do that, but you see like the spirit of that. It's like we're trying to differentiate on mobile, experiences. Ton, right? It's like if Ton was a roll up, like that would be another one, right? It's more similar to Coinbase, but
So I think with the one caveat, I'll say that like a new L1, I don't think this applies to you because you can't really do this. But I think that there's going to be, I think that the winners, there's been a long held view of mine, is that it's going to be people who build apps. Like you're right, there's just a very limited playbook that you can really run as a pure play developer platform, like a new L2 or
yeah,
something like that. You can do you kind of get your bear chain baddies or your like build the community and all of that kind of stuff, which is super real and super valuable. But the what Eugene has, right, going into Atlas, they're just the most recent example here, which is why I'm referencing them. But they actually built an exchange, so not only do they have a lot of knowledge, but they have a user base that they can import on day one. And all the other examples that you mentioned started with an app. Coinbase started with an app, Telegram, and Amazon did as well. So I think this is one of the metas that hasn't like fully shifted in this industry yet. Like people are so used to building infra that I don't think the shoe has dropped or the light bulb has clicked on that you got to start with users. And then once you have the users because you built something that they want, then you can reverse engineer your way down the stack. Like there's
yeah,
a real strong bias for starting at the base of the stack in this industry, as
yeah,
opposed to the other
yeah.
end.
I think it's also just the DNA of like a large part of the developer community.
Yeah, I agree.
I don't think a lot of the app developers are thinking about chains, and I don't think the chain developers know that they should probably start with an app or feel comfortable starting with an app. They think like, maybe that scares off other third party developers. But I think like Friendtech's a pretty interesting example. It had a moment
Yeah,
in time where like could have been printing sequencer fees, right? And maybe that's just not the team that like had the the desire. Actually, you know what? I think they were going to do friend chain for like a second towards the very
yeah,
end.
I think so too.
But like it's a good example where you just bring that to your own chain. Like you almost had like enough distribution to kind of like get something going around there, and then have like a bunch of social apps kind of be built around it. I think the next time we see one of those like big breakout social apps, like it would be interesting. We'll see, like maybe they continue just to not give a shit about owning infra. But maybe one is like, all right, great. I launched as a smart contract app. I found, PMF or enough of it, right, that I'm just going to go right on over to my own chain, try to build an ecosystem around it. Yeah.
I don't want to get too derailed here and talk about Friendtech, but Friendtech is a super interesting one. I think a lot of people feel like personally gutted by that one because it was, first of all, it happened at a time when everything was completely dead. It took over everyone's feed. It was like, hey, we finally have an app that looks like the beginnings of actual product market fit. It was by a crypto native, and they just, on the one hand, you could say, hey, they abandoned, they stopped, they turned over ownership of the contracts or whatever, and that's what Uniswap did. But yeah, but Uniswap isn't a social app. Like you could the the protocol was basically done on V1, and you could just swap. But that's not really the case with a social app. You have to keep.
They were printing enough revenue from in-app fees too that I don't think like sequencer fees would have really moved the needle, but like could have. People were trying to snipe those keys and stuff like that. Like that's MEV. Polymarket's another interesting one, right? As definitely having this moment in time where it has distribution. It's got tons of mind share, and I don't know what their monetization angle is. It doesn't feel like they really care about having like an ecosystem of third-party builders on Polymarket, but like I think that's another one. If they were to move over to their own Rollup, maybe there's too much product friction right now, but maybe you could do it like post-election. It's really interesting. I'd love to be in the room for some of these some of these builders, and just I always try to like ask when I talk to builders of like a decently successful app that's on a shared state chain. It's like, well, what would push you over the edge to like have your own chain? And yeah, at the moment, just not really a priority for most of them.
Mm-hmm. So Myles, I know we got to wind down here in a second, but this is the classic question, right? But like end state market structure for this, right now there are, I guess, in maybe to editorialize a little bit here, it felt like there was this whole wave of L2s that launched, sometime over the previous 18 months. And there was it was all gen purpose, and some were optimistic, a bunch were ZK, but there wasn't an enormous amount of differentiation in between them, right? And now we're on the cusp of this next gen wave of L2s, which are starting to differentiate on some of these axes, be it like the performance of Mega ETH or the very sector specific focus or whatever it is. You're starting to get more innovation, but still, just the raw amount of L2s that exist are very high. And honestly, like the optimisms and arbitrums of the world have a huge advantage in terms of just the network effects that they have on their platform. And every day there's a pretty crazy chart of just the amount of ETH that flows into Arbitrum on a daily basis. It is huge, and that lead is only extending. So I don't know, how do you view this playing out brass tacks over the next couple of years, assuming maybe we get a bull market with some more activity? I mean, it feels like we've got too many, but I'm unsure of how it actually ends up shaking out.
Yeah, like in general, I've always been kind of like a believer of horizontal scaling in the long term, which does point to like lots and lots of chains. But I do think that horizontal scaling does not work at the current moment, given the amount of trade-offs that I was just talking about earlier around like the pain that comes with like going to your own chain. And I could see a lot of this getting solved in the next like 5 years, and then I think a combination of could have little sort of zones, right, of like ecosystems, the frameworks providing a lot of first party services, tooling, infra, like interop services, and maybe have like a few big like framework winners, and maybe those outcomes are not even as big as the app winners right on top. I think in general, like if these things become platforms, the goal is like the value of like the framework of the platform itself should be a fraction of the value, created on top. And so I don't know if the right way to think about end state market structure is like, which framework like wins, if the frameworks maybe end up being less valuable than like the big winners on their platforms that help them like win, right? And so yeah, I think it's just I don't have a great answer for you. I think you're right in that you should just be following like distribution and following the apps, and seeing what their preferences are, right? Because maybe these large shared state sort of, platforms end up winning out. I mean, there's never going to be just one of them, right? But I think maybe that's where like the value of keeping things everything together in one place just is always better than the sort of trade-offs that come with like horizontal scaling fragmentation. So I don't know if it's a great answer for you. I just think that we're kind of in a transition stage, where some are going to go for like the base layer that's supporting a big ecosystem on top, and some are just going to go all in on their own shared state.
Myles, what do you think about the this idea that L2s might try to spin off and be their own L1s eventually? Where do you fall on that subject?
I don't think they will. I just think the economics are actually much, much, much better to be an L2.
Mm-hmm.
And yeah, I'm not sure the benefits will ever outweigh like the costs. Like I really do think that like you could build like Mega ETH versus Monad will be a great example, right? If the two have like complete feature parity, like let's look at what the economics of the chain of the respective chains end up looking like. You just get you don't have to do as much, right, as an L2.
Yeah.
But some of these L2s are functionally the same as what a lot of L1s are trying to be, right? Like Optimism is trying to now be, like kind of a settlement layer, right? For like a bunch of rollups on top. That's kind of what Ethereum is, right? But they don't have to pay as much as Ethereum does, right? To serve that role for its L3s, because it doesn't, it inherits security. It doesn't need to pay, thousands of validators, etc. Yeah, so I just do think that like I don't know at what like how many product benefits you really get from trying to go to from an L2 to an L1. And I don't. People always say like they want to become an L1 because it pumps the token. I don't think that's necessarily like true in the long run when people look at these things, actually start looking at the economics a little bit more closely. So yeah, that's why I'm skeptical that like the most successful L2s just become L1s unless I don't know, there are like overwhelming product and economic benefits to doing so.
Maybe someone who's more technical than me could explain this. So if you're sitting there listening to what I'm about to say and it's wrong, please hit me up, just DM me on Twitter. But I think one of the other challenges with L2s spinning off and being their own L1s would actually be a huge part of like one of the big moats that I think Optimism and Arbitrum have today is just the raw amount of ETH that's on the platform. And remember, this is a wrapped version of ETH, and it's very safe wrapped ETH because of the, how safe that bridge is between the L2 and Ethereum. And if you were to spin that off and be your own L1, then that changes quite a bit, right? And so I don't know. I'm with you on that. I've flip flopped around this. I was in the camp that they might spin off and be their own L1, but I think probably as long as that flow of ETH continues to be from main chain up till the L2s, it just doesn't really ultimately end up making that much sense, I think.
I don't think any of the assets in those bridges can, for like, without a ton of friction and pain, be migrated. Like
That's what I was
to an
thinking too.
L1.
It's like,
Like
would that even work? I don't know. Yeah.
um Like the only time we've ever seen is UIDX, but it was on such a smaller scale, right?
Yeah.
And yeah, they were able to migrate like most, not all of like the ETH over, but it's pretty painful. Um, and I could never see anything that's like not just like, imagine if there's a shared bridge, right, for all of the super chain and L2s and L3s, like that's going to be like a lot of ETH and a lot of coordination. It just won't happen. So yeah,
I mean, Arbitrum 1 alone has almost $14 billion. Like, I don't know. I mean, that's just, yeah. Even at today's numbers, it would just, I think, make everyone very
yeah,
squeamish. And
yeah. I think the bigger question is not do like the frameworks like end up moving. It's just if you're like in the super chain, right, or you're in Arbitrum like Orbit L3, what keeps you there once you're big, and you know have the ability to maybe have like a stronger narrative or product benefits, token benefits by moving um, to your own L2 outside of their like little ecosystem.
it's tough to speculate on this because it's been the wrong move, I think, to be, no offense to Cosmos here. I think Cosmos is going to get the last laugh in the end, but it's been the wrong move to launch for the most part as a full stack app chain, right? Like whatever benefits you incurred in terms of, performance, you sacrifice that for distribution and being on your own sort of island. Now there have actually been some Cosmos, like Celestia is technically a Cosmos chain, and they're becoming an ecosystem in their own right. And Berachain, still very early days, but they could end up being very successful. So, but I don't know. I think for the most part, this the Shelling Point common ecosystem, layer of trust is probably has been the right way to go. And it's that makes a lot of sense to me. That I can paint a pretty logical case that as long as the main use case is money and finance related, that's going to continue to be the case. We just really haven't seen something that's a little bit like gaming or social networks like really take off, right? Where there's less need to be interoperable and you can be on your own little island because it's just an app that people use. So I don't know.
Sure.
I mean, it's just so hard to guess at what that world looks like, you know.
Yep.
Um,
And you also have AVSs now too, right? That's an option. It's not like
yep.
totally your own chain. Maybe you don't even have like, ordering. Maybe you're like a stateless AVS too.
Yeah.
So that is now an option that's a little bit more tethered, right, to distribution than completely being on your own. So yeah, but I do think we'll continue to see like um, for specific, very narrow use cases like um, full L1 like Cosmos chains coming out. I just don't know how many more like Bera chains or monads there really will be, but like, we see like story protocol, like the IP, chain, right? That's choosing to be a Cosmos chain. People will start to see like, okay, could this have been a roll up? Would the trade offs be? So yeah, no, lot more like, I don't know, just a lot of the roll ups have basically been kind of like the same thing so far, and so it's just they're pretty homogenous apart from ZK versus optimistic. Like,
I'm still long the L1 trade personally. Like I just even I don't know. I think how long is that going to keep working? As long as Bitcoin and Ethereum probably keep going up on a somewhat consistent 4-year basis, I think there are going to be new L1s, and I've had the perspective for a while that I think they're going to be 5 or 6 with staying power at the end of the day, and I think those are actually going to end up being super valuable. Whereas to me, it's kind of like who needs the next L1, but I think you could very like the L2 space looks more crowded than the L1 space from where I sit. Like personally, it looks like more money and more teams and more talent are pouring into that space than L1. So, I think the L1 space is going to continue to work, and I think there are going to be some new ones that surprise people to the upside this next cycle.
yeah,
So,
yeah, or just people look at rollups more and more just like as chains, right? That's how rollups have begun to frame themselves now. Like sometimes they don't even mention the word rollup, right? And you like find that if you dig into the docs a little bit. So just call yourself a chain. L1,
yeah.
L2, maybe. doesn't matter.
I know. Maybe we'll stop with all these words like AVS, rollup, whatever. It's just, it is a little funny. It's like, this is like your back end architecture, right? It's just, you're a word, right? You're just a chain. You're just a network.
Yes.
Yeah. But
Yeah.
I also do think over time there will be less words like monetary premium and stuff like that. Which, by the way, I'm a believer in. I think you could look at. I know, Myles, you're a hater of that term, but I think that is real for things like Ethereum and Bitcoin and Solana. It gets so wishy-washy, and it's so hard to be quantitative about it at all. It's so, yeah, I'm more of a fan. I'm more on the side of like the mid-curve cash flows side of things in the long run. I think that's
Me too.
Yeah.
I'm with you.
Yeah.
I'm ready to end the monetary premium. Not just for like new entrants. Like, no, you're not gonna like. The goal is not to create a monetary premium if you're also trying to create like a developer ecosystem.
I agree, dude. Do you see Trump bought a burger with Bitcoin at PubKey this week?
Oh boy.
Yeah.
I think I saw that. I think I saw that they weren't sure if the transaction went through. It took a couple minutes. Some guy, can we get these guys, something a little bit better?
I've been to PubKey a couple times, and the first
cool. No,
it's very cool. No, I know. But I did ask the guy who was behind the bar. I was like, "Hey, do a lot of like Bitcoin people come through here and try to pay?" And he was like, "No, dude." So I don't want to blow up PubKey's spot, but he also didn't. I was wearing probably something normal, not like not easily identifiable crypto person. He was like, "No, don't worry." So
it's a cool it's more of like a cultural
it is
like a salon, right? Like for Bitcoin people or for crypto people like broadly. Not necessarily a like awesome purchasing experience with Bitcoin, but that's okay.
Trump, he's got some good publicity. Whoever is advising him is doing a good job. Although the World Liberty Fi, that looks like it's going to be an unmitigated disaster. So if it's not too late, maybe pull out of that, because I don't think that's going to be a great look.
No.
But yeah.
No.
Yeah.
We won't. It's okay. Whatever.
All right, buddy. This was a fun one. Glad we could hold down
stuff.
the fort while the whole industry is gone and partying in Singapore. So this was fun though.
Yeah, exactly. Just fun to pick a topic and kind of riff on it for a while. We'll do it again soon.
Cool. All right, dude. Cheers.
See you, man.
Hey, everyone. Hope you all enjoyed today's episode. Want to give a final shout out to Namada. Again, a team that is near and dear to my heart. They are building the Shielded Asset Hub, which is protecting the future multi-chain. Talked a little bit about how that works in the mid-roll, but for now, what I would highly recommend that you do is go check them out. They're in their mainnet launch phase. You can follow along with everything at namada.net. You can start rewarding yourself by shielding your actions and strengthening data privacy for all across the multi-chain. So thanks again, Namada, for all the great work that you're doing.